All right, well, good morning, active traders, and welcome to our Trading Week Ahead broadcast coming at you live here on Saturday. It's Saturday, it's summer, it's hot. We got to beat the heat and focus on the best charts. I wanted to wish you the best. We're going to get underway here right now. I'm Ken Calhoun. We're going to look at some of the top swing and day trading charts, and we're going to start spending a little more time on intraday charts since that's most of what I focus on, in addition to the swing trading charts. Just a reminder, we're internally sponsored by my live Trading Open Room, running it successfully for over 20 years. We're on our 21st year running Trading Open. Thousands of traders trained around the world, and I like to do live real trades in front of people, and not insane size or insane, 5,000 shares or something. I like to trade a few hundred shares at a time and keep things relatively calm and look for the best setup. So anyway, if you want to join Trading Open live room, you're welcome to. And just a note too, for this weekend only, if you've already trialed it in the past, normally I ask that you just trial it once, and so we don't have people retrialing it over and over instead of joining. But I'm going to waive that restriction. So if you've already trialed the room or you've been a past member and you want to try it again, you can do so for just $29, a money back guarantee. If for any reason you're not happy, I've had like 4 people ask for money back out of hundreds. You can certainly try it. So Trading Open live room. Anyway, let's take a look at that market. What a market, all-time new highs, right? Burning high up here for 4,500, just over the 4,500. We closed at 4,509 yesterday, and our VIX is dropped back down significantly, and it was minus 8%, minus 8%, 8.7% day yesterday. So for the upcoming week ahead, how many of you, I'm just curious, how many of you hate buying all-time highs? I'm in that camp. I don't like buying things that are more expensive than they've ever been. I like to buy high and sell higher, but in context. What I like to see is if something takes out an all-time high, then drops and pivots, and then I like to play that pivot. Or if I'm playing an all-time new high breakout, it's got to be a very specific pattern. And I like to teach which ones tend to work out best for intraday and swing trades in the live room as well. Let's take a look at what's going on. Earlier, I'm going to blaze through these charts. These are our picks from last week, except for Apple. That wasn't included. I added that just now because it looks good. But anyway, Cube has been a rock star. This was our picks of what we covered a week ago. Ask yourself, how much money could you have made had you traded some of these guys as they're on their blazing high new way up, like AMX, and most of these are picks from you folks who have mentioned them over the previous weeks, and so they're rock star charts, right? AMX looks great, Kroger's looks great. It's pulling back though, so I may day trade in this range, but I would wait for a new high to re-enter a position or to initiate a new trade. Costco looks good. It's also in pullback status though. So when you have these long sustained runs, that hockey stick kind of doing a pullback, that may just be the beginning of a bigger drop, right? Market's widely expected to do up to a 4 to 5% correction. I don't know that that's going to happen, but if it does, you want to stay clear from swing trades. So we're going to do more coverage on intraday trading today, on day trading charts than swings, but we're going to start off with swings just to get this party started the right way. But this particular market environment at all-time highs, I'm loath to do fresh swing trades in because we really feel extended, and the talking heads and all the jibber jabber out there from the street is everyone's expecting a big correction, and markets tend to be psychology driven. So with that expectation, or that concern at least, how many of you also share, and I'm curious, how many of you, show of hands, think we may have a correction coming in the next 3 to 4 weeks? Sometime by end of September, we may get a pretty big correction, or at least a modest one. So I don't want to buy all-time highs for swing trades, but it's a perfect time to day trade because we got great volatility. Look at some of these charts I'm going to cover in a couple of minutes. So now's the time to do more intraday trading. I'm not doing hardly any swings. I'm mostly cash right now. I'm like 85% cash, something like that. So I'm mostly cash. Cash is king. Microsoft broke that 300 but pulled right back. Apple illustrates my concept of don't buy nines. Thou shalt not buy anything with a 9 in it, because that's an expensive price to the rest of us, the professionals. So that's an exit target value, that has a 9 in it for most active professionals. So that's why I did not buy Apple recently. I'll take a bite out of Apple if it gets north of 152, but it's still in that congestion zone right under the 150 for now. Let's take a look at some charts that you folks had asked. Now, these are charts I'd asked people about 20 minutes ago, and these are the charts that so far you folks have asked about. If you have any others, feel free to post up to 1 or 2 tickers total each per person, because I got a really big, wow, big turnout today. Do feel free to hit me with your best chart. Give me 1 or 2 that you'd like me to look at, and I'll tell you instantly, is it worth trading? And if so, any ideas? And if not, why not? The most important thing I think that you get out of this is, why do some of these charts really stink? They're bad charts that you shouldn't trade because there's better picks out there, right? I mean, why? Compare this to anything you're trading. Compare that to anything at all that you're trading, right? If it doesn't look like this, you're probably not doing the right kind of thing as a trader. So with that in mind, that's a rock star chart. I love it. A+, ALKS, that's a rock star. I'd hit that over 3150. EPRT, another good chart. All right, we're 2 for 2. Looks good up at new highs. The main thing is, that's okay. I like the range, but again, here's a quiz question. Where would be there? I know Mira's going to get this, but for the rest of you out there, the mere mortals, she gets it right like 100% of the time. It's just amazing. She's been I don't even use the word student, but someone who's learned with me over many, many years. One of my really smart retired folks in Florida who knows this stuff. But for the rest of you, where would be your earliest long in this VRT chart? Victor Romeo Tango, where would be your earliest long? Keeping in mind that we never buy anything with a 9 in it. Where would be the earliest long in this chart? Any question, any ideas? In the interest of time, I'll say somewhere over 30. I'm not going to buy 28.50 in this market because it had a recent big 3 weeks of selling pressure. Warning, warning, Will Robbins, danger. So that means you're likely to get a false breakout. So I'm not going to hit 28.7. I'm going to instead be conservative. I'd wait for a 30. But it is worth trading because the range is good. Another good chart. You guys are full of great charts today. Congratulations. Is it worth trading? Absolutely. MMAT. For a day trade, yeah, I wouldn't swing trade it though. I like the big swoop up and the down and the bounce. I like the bounce recently here near 4, so it may be a good candidate for day trades, but I wouldn't swing trade it. GM, that's the worst chart of the day. Yay, you get the award. Johnny, tell them what they've won. You get the stinky stock award of the day, and that goes to Mr. Bill or whoever mentioned GM. General Motors, that's a horrible chart. If you're going to invest or something, go with Ford, right? Ford's got EV locked up. GM, that's a horrible chart. I shorted under 46, not a trade recommendation. Again, all this is for educational use only. I'm not making advice about what to buy, sell, or hold. By watching this, agree to not make actual trades. All these compliance disclaimers you got to say as an educator. That's great. I'm sorely tempted to trade that one myself. That's a perfect chart. That gets my best chart of the day award. So coming off the stinker, whoever mentioned NAVI, hats off to you, sir or madam. This is a wonderful chart going from 13 to 23. You want these charts that are tied like a string tight, right? Just like my handy dandy Montblanc pen, which I don't use much anymore. It's got to look like that. If it looks like choppy, why make things tough on yourself? Trading is difficult enough as it is without trying to overcome choppy, horrible up and down charts. You want a consistent story. That gets my chart of the day. Actually, that gets my chart of the month award. So I'm going to put that one. That one gets the top slot. So thank you. I don't want to trade at all-time new highs, but if I were, I might still hit this because that's a good chart. It's got a perfect blend of volume, volatility. The volume's over 1 million shares. The volatility, it's doubled in price. It's got a clean, straight. That's a great chart. So if you swing trade, that's the kind of chart you want. I look at day trade charts too. That one's good too. I like the recent strength. It's got the main thing we like is tight, clean, going up charts. The pullback depth and the bearish engulfing up here may be troublesome. And just a quick note, I just got off, well, I should say, did some emailing with my colleague Steve Nissen, and and Paul, and we're going to be doing a webinar together later this year. So we're going to do yet another webinar together, Steve Nissen and myself. He's the world's foremost authority and only person you should learn candle charts from. I use them daily in my trades because they work. So learn with Stephen and myself. And anyway, that's called the bearish engulfing. That means you don't go long unless it gets back over here. We have a previous high here with a topping tail, almost shooting star pattern. So obviously, we don't want to go long until it breaks that over 145. It's kind of obvious, but yeah, it's a good chart. It's worth a shot if it takes out new highs later. This one's good, but a little pricey for my taste, up at 250, but it's a great chart. So we've only had one stinker so far. No, now we have two stinkers. This one is a smelly Nelly of an AOSL chart. This would be fine for intraday trading. So I don't know if you were mentioning this for intraday. I'll put it, the volume is only 300K, so it's kind of thinly traded. So I'm on the fence. I'll put that on I'll try and remember to look at that for the intraday charts, which we're going to cover next. But definitely not for swing trades. Well, that's the second worst chart. So that one's perfectly terrible. It's got no consistency. It's all over the map. This is what I call bite you in the ass chart. Because seriously, this would bite me in the ass. If I bought 14, oop, I get stopped out at 12. I buy 15, oop, I get stopped out at 13. I buy 18, oops, I'm going to get stopped out at 16. Just say no. This is a perfect example of a terrible chart for swing trading. Fine for day trading though. The volume and the volatility, meet spec on Thursday was okay. So day trading, swing trading, not in a million years. So no, that's a pretty terrible looking chart. TX is reasonably good despite the pullback if it breaks the 58 and again 60. So it's okay. The chart of the day award goes to whoever mentioned NAVI, right? November Alpha Victor India, right? Trying to remember my phonetic alphabet. Anyway, now let's change channels and take a look at some intraday charts. But yeah, good charts, folks. Thanks. Let's see, that AOSL would be worth a shot for day trade. Nope, too thin. Volume's crap on that. So those are the kind of charts you would never in a million years trade anything that has this thin volume. The reason is because these kind of things are often mentioned by unscrupulous sorts in chat rooms on the internet where they can artificially move price by front running their members by saying, oh, it's going to go to the moon after they put on a big trade, and then their hapless members buy into it and then they sell and then it craps out and drops the next day. So volume, safety, numbers. Thin volume like this, we never trade. My best day trade of the week was when I traded SPRT yesterday, and I knocked it out of the park. Live with real money trade with proof for my Fidelity account. I showed the P&L brokerage statement to my members yesterday live as I was, right after I traded it to show them. I bought on the way up here and I sold the first gap up. I think I sold perfectly. I got to fill it like 42.40, something like that. When you're in a stock and it gets halted, often when you get in a stock and it gets halted, it'll often gap in your favor the first time, and maybe the second time if you're lucky, but never the third time. In this case, because the high volatility market and the fact that it gapped up in my favor, main thing was it gapped up 4 points in my favor. And I said, well, that's more than I even was hoping for if it just did a slow, steady run up. I was hoping to get maybe a point or two out of this guy, maybe 2 points, but it doubled that expectancy. So I sold the instant I saw it got unhalted. I'd been watching it for unhalt for my members. And as soon as it got unhalted, I changed what I had a sell stop order into market order and just sold it and booked a nice profit. So anyway, an easier chart to trade was something like BBIG. And one of my smart traders, Miguel, had mentioned this one yesterday for our members, and BBIG. These are the kind of charts we cover in my live room exclusively at Trading Open. Now you can go to www.tradingtheopen.com, and that was my old site, and I since closed it and put the site inside my main trade mastery site. So anyway, for those of you old schoolers, remember you can still type in tradingtheopen.com, and I set it to where it forwards over here. But the website to go to is my trade mastery site, and type in trademastery.com/live. And I want each and every one of you to register. If you're not already, I know a lot of you are members, but for those of you who are not yet members, try me out. It's 29 bucks. I've been doing this full time 21 years. And I have P&L proofs that I actually really trade daily. So I'm the real thing. I'm not one of these guys who just talks about charts. I'm a real trader. It's what I do. And my lessons learned are the business. So anyway, join my live room for more fun and festivities. So Be Big was good. It doubled from 3 to 6. Another one that's interesting but more difficult to trade is Neuro. And we knocked it out of the park yesterday with our call on this one. Neuro ran all the way from 12 to just under 20, but this one would be very difficult to trade because it's not got a nice clean sweep chart to the upside. Charts that are easy to trade look a little something like this. Now it's a little pricey for my taste, but this is the Russell Small Cap Bull Leveraged ETF. TNA is in Tango November Alpha. TNA running from 85.5 up to 92, got a 7-point range, a $7 delta on this guy. And this was a really good run to the upside. And similarly to the downside was our TZA inverse. Now, one of the strategies that I published in Stocks and Commodities a year or two ago was what I call an arbitrage, which I should have called it a hedge, but the same kind of thinking. You may want to try inversely related instruments. It's kind of an advanced, good technique that I developed is you may want to put buy stop orders above each of the long bias and the short bias instrument, whichever one triggers first works out. And then as it runs up, you may put an order in the opposite because they're guaranteed. The only guarantee in the stock market is that inversely related instruments are 100% correlated. I used to be a corporate statistician for the Ford Motor Company, a fantastic company. And sometimes I miss it. I don't miss Michigan, but the people are really smart. Anyway, the point is you got really wide ranges, and this is the only 100% guaranteed correlation in the stock market is the long versus the short bias exchange traded funds or ETNs. The trick about trading those is a lot of them are choppy and difficult to trade. So we want charts as rule of thumb for day trader, even if you want a chart like this that's like priced $15 or $20 a share is my specialty, but you want charts like this for day trades that have a nice clean sweep up. Compare and contrast that. You want to be done by 11 o'clock. That's 11 o'clock because before 11 you get what's called open range breakouts, and that's where you get really good price action and volatility. Usually after 11 things slow down. It's kind of like turning the volume down, and it's much more difficult to trade because there's not as much upside. They usually kind of chop around sideways between 11 and 1 or 2 and into the close. The best time to trade is the open between 9:30 and 10:30, maybe up to 11. The second best time to trade would be the close between 3:30 and 4. And the time to avoid the no man's land is usually midday, unless the stock market's been doing a rally all day morning or a sell-off all morning. Then you may look for a midday lunchtime reversal. But without that condition, you want charts like this that have really good volatility. But look at that, it's a wonderful chart. So compare the clean, easy to tradeness of this chart with the relative. Would have been tough to trade that one a little bit with the Neuro, but still worth trading because of volatility. One that we've been covering for our members for this last week or so has been BT, Bravo Tango, going all the way from 10.7 to 12.7, a $2 runner in that one. That was really good. Another strategy for your consideration, for your edification as an active trader. And I test all this stuff constantly, and I'm constantly looking for improvements, and I teach you how to do that in the live room. But one good strategy is put on, you mark out your pre-market high. You check and make sure we're not right under whole number. We are, so we never go long right under whole number. I often use 20 cents or so above a whole number to put on the initial trade. So here's the play. You look for something that's in a bullish uptrend. You buy the first sign of a decent breakout. 20 cents above a whole number is my go-to strategy. And then you put a hard stop, initial stop, relatively wide on this. Now I was scalping yesterday. I was trading both the TZA and UVXY into the close with 200 and 300 share blocks with anywhere from as tight as 7 cents up to 20, 30 cents trailing stop. So I play my day trades tight, but for intraday, kind of a hybrid approach, kind of somewhere it's still a day trade, but it's more in the swing trading It's how to do a swing. Well, it's what I call intraday swing trade. So you put on the trade with the breakout here, smaller share size because you have to use a big wide stop that's right under the current day's low. But then you just try and not close the position until the end of the day. So you let it ride all day long. So that way you don't have to navigate the choppy ups and downs, which is very difficult. I've been doing it for 20 years. I know the difficulty. An easier way to day trade, and one thing that I like to feature in the live trading open room, we do open range scalps every day, of course, but we also, in the back of my mind, I also remember and then tell traders live to look for this play. You put on the long right above a pre-market high, put the protective stop right there. That's the place that makes sense for the widest stop you would use. A tight stop would be like 11 or something, but a wide stop would be here. Then come back at 3:30 and check, like putting something in the oven, I should come up with a clever name for that, but putting a cake in the oven and coming back half an hour later. Not that I cook, I haven't cooked in 30, 40 years, but anyway, you put a cake in the oven, you come back half an hour or whatever later, and it's, or a pizza pie, and yeah, I like pizza better anyway, so nice pizza, and it's toasty and tastes good. So you take it out of the oven at 3:30 or so. So that's a good intelligent way to day trade without having to navigate the chop, is put on the trade on a breakout in the morning, protective stop, and then let it ride into the end of the day. Now, of course, you can experiment with tighter stops as well, so that's up to you. Other charts of interest, MARA, Marathon Order Bitcoin plays. This is another good example of a spectacular winning alert that I gave members yesterday, and it worked out great for us. It ran all the way from 36 and change up to 40, whole number resistance. Always sell into whole numbers because, as you can note from this chart, the technical resistance is at 40. And I always tell my traders, new traders, sell it all here now when something hits a 0.8 right under a whole number, or in this case, a decade value. It's good to buy right above a whole number. You may see my stocks and commodity whole number range. Let's say this is, I don't know, 39 and 40. You buy right above the whole number and sell right underneath the nearest whole number. So that's another strategy. So anyway, some pretty good charts. I was keen to see if we'd get an end-of-day squeeze in this. I played it here starting off the base, and I sold into the resistance there, but it didn't run as much as it has in other days. I was more keen on tease up. It was ever going to bounce, but it didn't. But if the market goes weak next week, and our Russell, especially, this is the small cap inverse, it goes up when the small caps go down, and it goes down when the small caps go up. TZA has really good range from 28.40 to 31, so 2.5 sticks on that. So that may have some play in it between here and 30, at least come Monday morning. So that may be a good bounce play to keep in mind. All right, well, with that, friends, I think I'm going to wrap up. Let me see if are there any questions or any other tickers? Let me see. I tell you folks had some really good charts today, so thanks. Overall, good picks. Like 70% of the charts you had asked about were great. And we were saying the corrections. A lot of you are saying things about the correction coming. And yeah, I agree, Felix. Yeah, Bitcoin's a bullish setup. Let's see, BNTX, and the VIX. Let's see. Question from Mike about AFRM. Sorry if I don't get to everybody's questions, because a lot of you here and just me running the show here. Wow. Yeah, you're right. I'll put that on the radar. We'll cover this come Monday. It's out of my price range. I don't like $90 instruments, but you're right, that mother of all gaps, AFRM. You can see the tape. It's trading at $92 a share after a 68 close. So a $30 gap. You don't see those too often. Hey, Sherry, I traded the end, asking how did I trade UVXY and TNA. I bought them at the very end of the day on the bounce. So, but they didn't bounce much. So, it was likely not a big run. Let's see, DraftKings. And I like TZA instead of 30 because there's, for day trade, because there's more volatility or a bigger trading range. Let's pull up on DraftKings. I like DraftKings. I like MGM too, for that matter. MGM in our gaming space have been strong. DraftKings looks really good actually for a pivot long. Not as good as some of the other charts, but I do like that sector. I think there's a lot of money potentially to be made in the casino and gaming sector. So MGM and DraftKings, both okay, but there's better fish to fry. There's better charts out there. Okay, that's right. Yeah, Steve was telling me Amazon uses AFRM, and that's what caused the jump. Yeah, Penn Gaming's good too. I used to trade Shuffle Master and Caesars and Win. I used to trade the gaming stocks a lot, but there's better ones out there right now. Let's see, THC. Yeah, it's pretty good. It's a nice uptrend. I like charts that don't cost too much, that have really strong directional moves. I still like that Navi chart. So whichever of you mentioned, this is the kind of chart that I like to swing trade because it's under 30, 40 bucks a share. So it's not too expensive and you don't have to tie up too much of your capital. The thing about swing trading too, by the way, is it can get really expensive if you're trading multiple positions like I do because it takes up a lot of capital. So I don't like trading instruments that are $200 or $300 a share because I can get similar chart patterns for a fraction of the price. So from a leverage standpoint, the trade-off is sometimes the less expensive charts, with rare exception like this one, don't have as consistent longer term trends as some of the the larger caps like Costco, right? Costco has been beautiful. It's a hammer in the lower left, right? Hammered out a base right near the 300 even number and ran up to 450. So, but at 400 bucks a share, how much are you going to buy? So I prefer to, at least my personal preference is to trade things that give me great leverage, like that NAV chart or this cube chart, the one you guys had mentioned earlier. So yeah, I'm interested in Ford too if it breaks 15 at some point. It might have already done so. I traded it a few weeks ago, but and gave up on it because it wasn't, it's still not doing much of anything. Yeah, I remember 15 was kind of my threshold. I bought it on the way up and sold it on the way back. But it's not good yet. But do keep Ford on the radar. I think if you're a long-term swing trader or active investor, Ford Motor Company is good. I like Apple better. But again, I'm starting to sound like one of those talking heads on TV, and I'm not. I'm an active day trader, so I like charts like that. Anyway, y'all have been great. I wanted to thank y'all so much for being here. I'm going to go ahead and wrap up today's broadcast right now because I'm going to keep it short and sweet. Don't want to drag this out too long. The place where all the intelligent magic happens is my Trading Open Live Room. I'm a UCLA graduate, Money Show speaker, #1 rated author for stocks and commodities, Reader's Choice winner, 3 years. I got first place in 1 year and second place another year anyway. So I'm a top rated industry expert and an active real money trader who doesn't just talk about this. Unlike most of my competitors, I actually really trade. And I'm happy to share what I've learned with you and answer questions, give you coaching, give you feedback in a non-threatening, positive, upbeat, supportive environment. I don't bite people's heads off and say, what is your malfunction? How could you ask such a dumb question? No, I'm not that guy. I'm very, try to be very helpful and peaceful. So anyway, good stuff. Hey, cheers, Margaret. You two have a lovely weekend. Appreciate that. Hey, Steve, I'll see you next week too, man. And to leave for most of this recorded. Yeah, Harold, hey, how you doing, man? For my live room. Hey, Trey. In theory, questions asking about Pfizer. I did like Pfizer, but it's been pulling back the last couple of weeks. So if it breaks a double nickel, say 55, 56, I may get back in. But I like Pfizer if it does take out a minimum of 2 or 3 day multi-day high. But it had been going up nicely, but it's been pulling back lately. So I'm not doing swing trades much right now. I'm mostly doing intraday trades. That's where most of my energy is focused. So, but I do occasional swing trades. But since the market's widely expected to correct, I don't want to put on large size and large risk. So in the meantime, I'm doing much more intraday trading and having a good time with it too, because we've got really good volatility and good price action ranges in the charts that have the best entry and exit criteria. So I think that's about it. Hey, Trey. I'm not going to pull. Somebody asked about some of the other gaming stocks. I would focus more on intraday trades for the charts that have big ranges. At least that's what I'm trading. So anyway, it'd be great to work with y'all. Like I said, for those of you who just logged in late here, for this weekend only, even if you've already trialed the room, I'm relaxing the restriction of only one trial per person. And I do double check. And if you've tried this in the past, you know the hard way, kick those orders back out. But if you try and retrial it. But for this weekend only, if you've not yet trialed the room, or even if you have and you want to try it again, we've expanded our coverage and we do a lot more in different price point charts as well. And so with specific entries and exits. Let me show you an example. Like from yesterday. So here's the tickers that my members were given yesterday. That was my trade. Yeah, I was in at 34.7 and I was out at way up in the low 40s. Anyway, the point is I give our members entries and live exit calls too. So I squawk out ahead of time before it gets to a price where I'd be looking for a breakout or where I'm going to trade it if I'm going to trade it. And also live in real time, I squawk out the exit. I say, sell half now, trail a stop at break even on the rest. Or we're up at 39.8. Let's go ahead and sell it all now because we're getting a pullback right under the 40. So I walk you through step by step exactly what to trade, how to trade it, and where to trade it. So that's another reason the room's been such a success for the last 20 years. So anyway, look forward to working with y'all, and I will see you in our next broadcast. Until then, happy trading and happy trails. And I hope that you do great in your trades and not only feel comfortable with your trade setups, but do well in terms of your P&Ls and start making this thing work for you. So I'll see you guys next week. Thanks for being here.